Everyone, thank you very much for joining us. And as you know, we are discussing corporate tax today. And this corporate tax, our understanding, based upon our understanding, our knowledge, based upon the public consultation document and the press release issued by the UAE government. The law has not been introduced till now. We need to wait for the law. Once the law will be introduced, then we'll be in a better position to discuss all related provisions of the law as well. For the time being, our discussion, as I mentioned earlier, it will be depends upon the public consultation document as well as press release issued by the government. So let's start our discussion. We know this that it was announcement was made by the Ministry of Finance that the corporate tax will be introduced on June 1st, 2023. Financial year starting on and after June 1st, 2023. The companies whose financial is starting after this period, they will be subject to corporate tax. And this announcement was made on January 31st, 2022. It was mentioned in the press release that the taxable income up to 375,000 corporate tax will not be applicable. It will be 0%. Any income which is beyond 375,000, it will be subject to corporate tax, and corporate tax rate is 9%. So initially, the income that is subject to 375,000, this income is specifically for the businesses, for the startups, for the new businesses. So means for the new businesses, for the startups, their income will not be subject to tax. This is encouragement by the government that the new business needs to come and they need to introduce the new businesses. So the income will not be subject to tax up to 375,000. So any income beyond 375,000, it will be subject to tax at 9%. And this 9% will be applicable on all businesses. The financial year starting on or after 1st June 2023. Later on, government has issued the public consultation document. This public consultation document was introduced on April 28 and 2022. What was the reason of issuing this public consultation document? Public consultation document was introduced by the government to seek opinion of the stakeholder related to the corporate tax law. The government is in the process of finalizing the corporate tax law. Government wanted to seek the opinion of all stakeholders to introduce the law very smoothly and to adopt the best global practices. The government was seeking opinion of all respective stakeholders, and government asked that the submission of this opinion that they have given the date by 19th of May 2022. For sure, a lot of people, a lot of stakeholders, they would have definitely given their opinion. Based upon their opinion, government is in the process of finalizing the law. Once the law will be finalized, definitely it will be introduced by the government. So a lot of people are asking this question into the market, what is the difference between corporate tax and value-added tax? Will it replace value-added tax? Is it a new tax, a different tax? Then I have prepared this presentation. It will be quite helpful for everyone. So we'll be able to know what is corporate tax, what is value-added tax, what is excise tax. So we have different types of taxes. Initially, I'll say there are two types of taxes. One is the direct tax. Second is the indirect tax. So direct tax is applicable on the persons or companies, the people who are on which this tax is applicable, they are liable to pay this tax. So it can be progressive in nature, it can be proportional in nature. Progressive means when the taxable income will go up, rate will go up. This is called progressive tax. Proportional tax means the rate of tax will remain constant. The income will go up proportionately, tax amount will go up as well. So two taxes, direct tax and indirect tax. Direct tax is applicable. Person pays the tax from its own pocket to the government. Indirect tax, person collect from others and pay it to the government. We will see how it works together. So direct tax can be progressive in nature, or it can be proportional in nature. So corporate tax, corporate income tax, this is a direct tax, and proportional direct tax means income will go up. Rate of, as I mentioned, rate is 0% or 9%. If the income will go up, rate will remain same, amount of tax will increase. Income will come down, rate of tax will remain same, and income and amount of corporate tax will come down. So there is a personal income tax. This is also a direct tax. Wealth tax is also a direct tax. Other like property tax, inheritance tax, these are the direct taxes. In the UAE, Corporate tax, income tax is being introduced right now. They know personal income tax, they know wealth tax. I think they know wealth tax in UAE as well, and the property income tax, inheritance tax. So these are the direct taxes. So for indirect tax, these are proportional in nature. Rate is same, income will go up, respective tax will go up. So VAT is a indirect tax. Means the VAT is indirect tax. The person who pays the tax to the government, ultimately that person doesn't bear the burden of tax. Like if the VAT is being implemented in party A, ultimately it will be paid by party A, but the end burden will go to any other party. So this is the nature. This is called indirect tax or consumption tax. VAT is also called the consumption tax as well. So excise duty, this is also indirect tax. Custom duty, this is also indirect tax. Other tax, sales tax, service tax, these are the indirect taxes. So as I mentioned earlier, corporate tax is a proportional direct tax. Secondly, in some jurisdictions, this is called company tax. In some jurisdictions, this is called business tax. Corporate tax is different from the personal income tax. As I mentioned, personal income tax, this is also income tax, but applicable on the individual's income. If the tax is applicable on the individual's income, this is called personal income tax. In the UAE, there is no personal income tax for the time being. Then corporate tax is different from the value-added tax. I will discuss value-added tax is an indirect tax. Corporate tax is a direct tax. Value-added tax applicable on one person, burden is one person paid by another person. And corporate tax, the person who pays the tax, the same person bear the burden as well. In the same way, corporate tax is not a replacement of the value-added tax. Means corporate tax and value-added tax both will keep moving. So value-added tax will be applicable on taxable supplies. Businesses will be able to claim input tax, business will be liable to pay output tax, and the taxable supplies, businesses will be liable to pay, submit the return, they will be liable to pay net amount to the government. But corporate tax, it will be applicable on the adjusted taxable profit that we will discuss in our next slides. So what was the rationale of implementing corporate tax in the UAE? What was the reason that the government has implemented corporate tax in the UAE? The rationale for introducing corporate tax, it has been written in the press release that the government wanted to achieve the strategic objectives and government wanted to accelerate its development and transformation. This is the reason that the corporate tax is being implemented in the UAE. Second thing, government wanted to cement its UAE position as a leading jurisdiction for businesses and investment. This was another reason that the corporate tax is being implemented in UAE. Corporate tax based upon certain principles. These principles are principles of certainty, neutrality, transparency. It has been given in the press release. So flexibility, dynamics, alignment with the modern global practices. So this was the reason. These are the principles based upon which corporate tax is being implemented in the UAE. So corporate tax in the Gulf, CT is already in the place. Corporate tax is already in the play in the Gulf. In the Gulf cooperation countries, UAE is the 5th GCC country that is implementing corporate tax. At the moment, there is no corporate tax in Bahrain. What are the key high-level basically principles based upon this corporate tax? Key high-level provision based upon the public consultation documents and based upon the press release issued by the government, that what we have extracted from this: individuals will not be subject to tax. As we discussed earlier, the individuals mean individual income tax. There is no individual income tax. If the individual are getting any salary, they're earning any income from the real estate, individuals' income will not be subject to tax. Taxable income up to 375K, the 0% tax will be applicable. Any income beyond 375,000, tax rate will be 9% that we have discussed earlier. So no corporate tax will apply on the foreign investors. Foreign investors, if they are not doing any business in UAE, they have a certain investment in the UAE. From the investment, they are getting any type of income. That income will not be subject to corporate tax. Corporate tax will apply on the adjusted net taxable profit. This is very important term. The tax will be applicable on the adjusted taxable profit. So it has been given in the public consultation document that the businesses will be liable to calculate their taxable profit based upon the international financial reporting standards. Then they will map these taxable profit, whatever they have calculated based upon the IFRS, into their taxable profits. And whenever they will be mapping, a lot of adjustment will be there. Like many businesses, many expenses, tax authorities, they will not, FTA might be, they will not allow many expenses, they will allow, as usually tax authorities follow cash basis of accounting and accounting principle based upon the accrual basis of accounting. So this is for sure, there will be hybrid principles. Basically, some item will be allowed on cash basis, some item will be allowed on accrual basis based upon the hidden principle. These accounting profit will be converted into the taxable profits. It will be a challenging exercise for the business. And then tax will be applicable on these taxable profit. This will not be applicable on the accounting profit. Moreover, it has been given in the public consultation document that the audited financial statements are not required for the registered businesses for the time being. Might be they will ask this in the future. Might be the law will give us more clarity. But for the time being, any requirement is not there. The businesses, they need to have the audited financial statements. Withholding, no withholding tax will apply on the domestic and cross-border payments. There no withholding tax, as I mentioned, it has been given in the public consultation document. No withholding tax will apply on the domestic and cross-border payments. The extraction of natural resources will be subject to tax at the Emirates level because they have a different respective law at the Emirates level for the natural extraction of natural resources, and these will be subject to tax at the respective Emirates level. Free zone businesses that meet all the necessary requirements, corporate tax will not be applicable, but certain transactions, if they're not meeting the certain specific requirements of the law, then the corporate tax will be applicable on those free zone businesses as well. No corporate tax will apply on the capital gains and dividend received by UA business from its qualifying shareholders. So there's no corporate tax on the capital gains, on the dividend received by UE business from its qualifying shareholder. Now we need to go through the what are the qualifying shareholder, and if the qualifying shareholder, if they are getting any types of capital gain, if they're getting any type of dividend, these capital gains, these dividend and capital gains will not be subject to corporate tax. Intergroup transaction will not be subject to corporate tax as well. Like in the value-added tax, like in the VAT, FTA is allowing to set up the groups, and there are two major conditions to set up the group under the value-added tax. The one is the businesses must be in the UE. Second, there must be a common control, and this common control can be in the form of shareholding, or it can be, might be the common control has been given to anyone through the memorandum as well. So if the control is common, the businesses are within the UAE, then in this situation, the companies can go for a VAT grouping. In the same way, an option has been given to the businesses in the UAE that they can go for a grouping. These grouping, they can go based upon the certain key principles, and these key principles are common control, and if they are falling within the UAE, then they can go for a grouping as well. We will discuss all these things in detail in our all upcoming webinars. So if the businesses are meeting this specific requirement, based upon these specific requirement, businesses can go into the corporate tax grouping as well. If the businesses are going into the corporate tax grouping, then their inter-business transaction, which are part of the same group under the same umbrella, their transaction will not be subject to corporate tax. So this is again incentive has been given to the businesses. So intergroup transaction will not be subject to corporate tax. So these are the key principles. I'm just repeating. Individuals will not be subject to individuals' income will not be subject to tax. Taxable income up to 375,000, it will be 0%. After 375,000, rate will be 9%. Foreign investors' income will not be subject to tax. Tax will be applicable or adjusted. Accounting tax profit business will be required to calculate the profit as per IFRS. Then they need to convert the profit into the taxable profit, and where tax will be, corporate tax will be applicable on the taxable profits. No withholding tax will be applied on the domestic and cross-border payments. The extraction of natural resources, as I discussed earlier, it will be subject to tax at the Emirates level. Free zone businesses, if they are meeting specific requirement, their income will not be subject to tax. But if they are not meeting the requirement, then their income will be subject to tax. No corporate tax will apply on the capital gains and dividend received with the UAE business from qualifying shareholders, and intergroup transactions will not be subject to corporate tax. These are the key principles, and as I requested earlier, we'll keep discussing all these things in our upcoming webinars. So proposed compliance requirement, what are the what the businesses are liable to do once the corporate tax is being implemented there. So again, the same principle, registration will be there, deregistration will be there, filing will be there, payments will be there, refund will be there. One thing I wanted to highlight, this filing is yearly filing. This is not monthly or quarterly filing. Business will be liable to submit their corporate tax return within 9 months from the end of the relevant financial year. They will be required to submit the return and they will be liable to make the payment by that time as well. So if we are going to the deadline that has been given by the government, the corporate tax is applicable on or after 1st June 2023. If the business financially is starting from 1st of Jan, so their respective tax period will be 1st Jan 2024, 1st Jan 2024 till 31st December 2024. So this will be their tax year, and this tax year, this tax period return, they will be liable to submit by 30th September 2025. So if the business is having a financial year starting on or after starting from 1st Jan, then their first return will become due by 30th September 2025. They will be liable to make the payment by the time as well. Refund will be there, assessments will be there, clarification, all usual procedure that tax authorities, registration, deregistration, filing, refund, registration, assessment, clarification. Might be the companies will go into the litigation. Companies have a different point of view, businesses have a different point of view, tax authorities have a different point of view, litigations, document requirement, assessment, transitional rule will be there. These all will be the part of the administration, and we'll keep looking into this in our next webinars. What is the way forward for the businesses? This is our last slide. Then we'll take your question. What is the way forward for the businesses? The way forward for the businesses is, first of all, we need to wait for the law. Once the law will be introduced, we need to go through the law, and based upon this, we need to move forward. Then impact assessment, the most important thing for the businesses, they need to see, based upon the public consultation document, businesses need to have that impact assessment so that they will be able to know what is the current position, where they need to be before the implementation of corporate tax law. Right now, the no anti-avoidance rule has been introduced by the FTA. So might be in case you are looking for some sort of restructuring, then you can go and you can plan the restructuring as well. You can go for a proper planning even from today as well. So the impact assessment will be there. Then the business needs to train their staff. They need to see the impact on their working capital as well. High level impact, you will be able to know it right now, but exactly what will be the impact on your business, you will be able to know this after the introduction of the corporate tax law. As I mentioned, the possibility of restructuring as well, because intergroup transaction will not be subject to corporate tax. So you need to look into this. Can you restructure your businesses? Might be if you're bringing any property in the name of the individual, as we discussed, individual income is not subject to tax. So might be there the possibility of restructuring as well. We need to do the restructuring. The second most important, the last most important thing is transfer pricing rules are most important thing for the group companies, specifically the companies which have cross-border transactions. They need to implement the corporate tax. They need to implement transfer pricing principle. They need to deal all transactions subject to the arm's length principle, so that the businesses will not be able to shift their profits from the one tax jurisdiction to the other tax jurisdiction. This is another key principle. Businesses needs to look from that angle as well. They need to prepare even today that in all their future transaction, it should be an arm's length principle, and the profits needs to be subject to tax in the respective jurisdiction, instead of avoiding the profit and shifting the taxable profit from one jurisdiction to other jurisdiction. Thank you very much. This is over from my side today. If you have any question, you are most welcome. And as I mentioned, this was our first webinar. We'll keep discussing so many other webinars. We'll discuss the corporate tax in detail. We're discussing the other compliance requirements in the UAE as well. We'll keep discussing. Thank you very much. Thank you. So in the chat box, I have it has been mentioned, please allow recording of screen. Okay, I'll look into this. Otherwise, you can find this on our YouTube channel. Definitely we'll upload it there. You can find it from there as well. Then will you be sharing this deck with us? Okay, you can share your email address. Definitely it will be pleasure sharing you. Okay, we have not received any further question today. I really appreciate your support. Really appreciate your time. Thank you very much. Have a lovely evening. Thank you. Bye-bye.